So businesses can borrow up to a maximum of 25% of their turnover or twice their annual wage bill. The minimum that can be borrowed is just over £25,000 and the maximum that can be borrowed is £5 million. There's some key sort of beneficial features to the loans. The first is that the term of the loan can be between 1 and 6 years, so it can be spread over quite a long period. There will be no arrangement fee, although it's worth double checking with your lender that is the case. And there should be no interest payable for the first 12 months because that should be backed by the government. The ones I've been advising on recently even had a capital repayment holiday for the first 12 months, so that is a possibility as well and worth looking into. The final key sort of feature is there's no early repayment charges, which is unusual in bank lending, but that just makes dealing with the loan in the long term simpler. The Coronavirus Business Interruption Loan scheme is managed by the British Business Bank, and the government is providing a guarantee of 80% of the lending. So the banks are being encouraged to lend to businesses that may well be marginal as far as their normal criteria for lending and may well have been otherwise rejected. So it's trying to encourage the banks to lend to those type of businesses during this crisis. The businesses will enjoy a 12-month interest-free period, so the government will pay the interest for the first 12 months to ease the cash flow issues for the business itself. There also has been a number of changes in relation to the scheme. So when it was first introduced, there was a little bit of backlash from the business community saying that the banks weren't really applying the loan criteria in the spirit that the government intended, and a number of businesses were turned down because they weren't able to provide sufficient security. The government has sort of stepped in and provided some clarification on that and now said that the banks are unable to turn down loans just because of that lack of security. So some businesses may well have already applied and been rejected. They should really be reapplying now because they may well now meet the criteria given that clarification. The other change that's worth flagging is that the banks initially were requesting personal guarantees from business owners and also asking them to provide their homes as security for the loans. The banks have now been given some direction on that they cannot ask for that type of security if the lending is under £250,000. So that again gives some benefit to the business owners and doesn't just shift the risk to the business owners themselves. So that's helpful. The key thing just to flag though to businesses is these are loans and they will need repaying at some stage. They're not grants that may well fall away. They will need repaying and businesses need to plan to repay them eventually.